Let us try to find some of the best shares from consumption theme. So there are many consumer goods companies which we use in our day-to-day life. Namaste friends, welcome back to GyanVeda channel. This video is made for educational purpose only. There is no recommendation for anyone. There are many well-known names in FMCG personal care categories like Hindustan Unilever, DABUR India and so many big and small companies, and definitely there could be a better investment value in some of these companies. Everyone must follow certain principles before the stock market investments, like we should know ourselves what is our investment ability, financial goals, what is our risk tolerance ability. Based on that we can make our expectations and make right choices. Diversify your investment based on the proper portfolio building and allocation. Anyone visited the channel for the first time, we request you to please subscribe, like, put comments so that we'll know your feedback. Don't forget to press the bell icon so you'll get notifications for our new videos. Let's talk about the first stock in this category. They are specialized into oral care products and mainly into toothpaste. So more than 90% their business is from this category. They have close to 50% market share in this category and they are known for their strong distribution. They are driving their business mostly on innovation and good value in the supporting brands. So many of you might have guessed the name rightly. We are talking about COLPAL, that is Colgate Palmolive. Market capitalization close to 40,000 crores. Promoter FII and DII together having a strong shareholding pattern. This is debt-free company, so good advantage. This is currently trading lower than the sector PE. They have strong operating margin. You can see 30% operating margin and strong ROC, strong ROE. Only one concern we could find in last 3 years, company has shown only CAGR 5% sales growth, but same time company managed to have 15% profit growth. They have good dividend yield of 2.61%. Now let's talk about the stock's performance. In last 6 months it has given more than 11% negative return, so it's loss. In 1 year also you can see here the stock has given negative return, but if you see this high and this low, the gap is close to 20%. That could be one buying advantage for smart investors. In 5 years also it has not managed more than Nifty 50 return, but if you see the maximum chart of this company, currently it is trading lower than the all-time high. That could be one advantage for smart investors. Let's talk about strengths, weakness, opportunities and threats in the stocks. So if we see the strengths, they have strong product portfolio, strong market penetration. Same time weakness is that the inflation in the raw material price is impacting this company negatively. Muted revenue growth is observed recently in the stocks. If we see opportunities, recently they have hiked prices of their products that may help in additional growth margin, and it has corrected more than 20% from all-time high. That could be one opportunity. Same time there are some threats in the stocks like competition, like some players like Patanjali could give a good fight, and dependency on one category like toothpaste, though they have 50% market share in that, that could be one disadvantage possibly. Tips for smart investor: before you invest in any stocks you should understand the business of this company, SWOT analysis, business growth potential of the stock, risk involved in this investment, and whether it matches your goal or not. For better investment options, you may want to visit our channel for videos on TCS, HDFC Bank, Zomato, top mutual funds, top cement stocks, and portfolio allocation and building. Let's talk about the second stock in this category. This stock has specialty in healthcare, oral care, food and beverages business. They have strong business presence in domestic market as well as they are driving the international growth. Close to 25% earning is coming from international business, and they are driving their business growth based on the rural growth, operating margin focus as well as innovation. The stock name is DABUR India. Market capitalization close to 99,000 crores. Strong promoter holding, FII and DII. Altogether, this is going to 90 to 93%. So you can see retail investor just has the 7% portion left. Debt to equity is very good. This is trading at lower than sector P. Operating margin is more than 20%. ROCA and ROE is consistently stronger. But in last 3 years, they managed to get only 7% growth in both sales as well as in profit, and dividend yield is less than 1%. Let's talk about the performance. In last 6 months, you can say negative close to 3% return here. In 1 year, not much attractive. It is given less than the Nifty 50 returns. In 5 years, here it has managed more than 110%, and maximum chart you can see. And now this is trading lower than the all-time high. That could be one buying opportunity. Let's see the SWOT analysis. Let's talk about the strengths. So they have increased the market share in all the portfolios of products. They have strong rural demand in recent times. Weakness, we can see the lower volume growth, and higher inflation is causing lower gross margin. Same time, this company can take opportunities from the global business demand, and they are trying to expand the brand reach based on the outsourcing approach. This company could get some threats like demand slowdown could impact, and some competitors coming in the Ayurveda and other healthcare products can impact this company. Some tips for smart investors. Before you invest, you should know how the share price varies based on the demand supply. You should know the liquidity factor of the stocks, what is the risk reward ratio. The stop loss can be used in case you want to reduce your losses in corrections, and you should not invest blindly in any stock. Let's talk about the third stock in this category. This stock has specialty in hair and wellness products, health and food products, and men's grooming. So market share, they have mostly branded hair oil more than 60%, branded edible oil more than 70%, and they are trying to have additional business growth based on the e-commerce and innovation factors. The stock name is MARICO. They are well known for Parachute and Saffola brands. So market capitalization more than 64,000 crores. If we talk about promoter, FII and DII, altogether hold close to 93%. So very strong shareholding pattern. Debt to equity ratio is also attractive, trading lower than the sector PE. Operating margin is little less than 20%. ROCE and ROE also attractive. In last 3 years, they have shown volume growth of 8% and profit growth close to 13%, and dividend yield is 1.5%. See the stock performance in last 6 months, negative return more than 3%. In 1 year, they have managed more than 20% return in 1 year. In 5 years, they have given less than Nifty but close to 85% return, and this is the maximum chart. This stock is also currently trading much lower than their all-time high. Let's talk about the SWOT analysis. So strength, company has shown good growth across the portfolio. Also the Saffola brand is showing good demand. Weaknesses, they have shown low rural demand in recent time. Also the consumption slowdown might impact this company negatively. They are trying to take opportunity from the raw price correction in last 2 years, and international growth also give them good boost. There are some threats like if the input price increases, there could be negative impact, as well as the slower demand can impact this company negatively. There is a very good book, The Intelligent Investor from Benjamin Graham. This book has given certain strategical points for investments, like we should always have a margin of safety, which we could see in these stocks based on the recent correction. Diversification is another tool. We should buy on dips, and for fundamentally strong stocks, we can take a long-term view. For such videos on investment, mutual funds, stocks, IPO, insurance, income tax, please subscribe GyanVeda channel, like this video, put a comment for your feedback, and don't forget to press the bell icon. Put down your feedbacks, demands, questions or doubts in the comment box. We'll definitely try to come with the new videos. Till then, happy investing. Thanks for watching. Dhanyavad.